Hey y'all, I'm Joy Bailey. I'm the mortgage boss, and this is going to be really, really brief. So I wanted to chat today about discount points. I've talked to you guys about down payments. I've talked to you about closing costs, roughly how much money you're going to need for your down payment and closing costs, which I suggested saving up about 6% if you're a first-time home buyer, to make sure that you have all of that. We also talked about breaking it out, like bucket number 1, 2, and 3, what closing cost goes where. And one thing I did mention in my last video or another video was that you have an option to increase your closing costs by paying discount points. A discount point, quite simply, is something that you are paying in advance. It's advance interest that you're paying so that you save money over the long term in interest. I don't have very many people that do that. But a lot of times I'm seeing that people are getting caught up in they want to have the lowest interest rate. The reality of it is, if I'm being honest with you, as long as you're comfortable with the payment, you're good. Discount points is something that it might change your payment by $16 a month. And I'm not even exaggerating when I say that. Depending on obviously how big your loan is, it's going to vary a little bit, but usually you're paying extra money just to save just a few dollars, maybe $22 a month. The reality of it is consumer behavior. People buy cars every 3 to 5 years, and people get a new home loan or they move every 5 to 7 years. If you're not going to be in that house long enough to get your money back, to realize any of that savings, it's not worth it. It's not worthwhile. It's a waste. And the reason why I say it's a waste is because 9 times out of 10, it's driven by this motivation to feel like you won the battle in interest rates. The difference between a 2.875 and a 3% is negligible, unless you're going to have that house and that particular loan for 30 years or 15, 20, 30 years. But you're probably not. And that's just a fact. You got to look at your lifestyle. You need to decide, is this something that you feel like is worthwhile in terms of the investment? Just to give you kind of a good example, I'm going to pull up an amortization chart here. And the number I've been using, I keep talking about $400,000. Because again, that's roughly the average purchase price here in Charlotte. Okay, so if you're doing a $400,000 home, $400,000, and let's say you're doing 3% down. I was deciding if I'm gonna do 3%. Okay, your loan amount is gonna be $388,000. Okay, again, I'm just going to use an example. These are not necessarily accurate interest rates. I'm completely making this up to illustrate my point. Let's say that today's market is a 3.25% interest rate, and you decide that you want to pay a point. So you don't have to pay a point. You can pay a half a point. A point translates to 1% of the loan amount. So, and it's not necessarily an exact translation. It's going to vary based upon the individual lender's rate sheet. It could be, 0.37%, to get you down to the next level or whatever. So again, just kind of trying to keep it simple just to illustrate my point. Let's call it 1%. 1% is 1 point, which is usually going to translate to 0.25% in rate. I'll say it again because it's very confusing. 1 discount point equals 1% of your loan amount. In this example, if you are buying a $400,000 home and you put down a 3% down payment, your loan amount is going to be $388,000. 1% of $388,000 is $3,880. That is probably going to take your rate from, again, if the regular market rate is 3.25, it'll bump it down probably just to 3%. For your $4,000 investment, roughly 4,000, so $3,880 investment, which is at one discount point, over the life of the loan, instead of paying $219,000 in interest, you'll pay $200,000 in interest. And again, this is over 30 years. So the investment of paying a little bit more money up front, that $3,880 up front, will save you roughly $19,000. Kind of going with my example though, of what I was saying earlier, like people tend to move every 5 to 7 years. Let's pretend that you wanted to move in 5 years. Well, over the course of that 5 years, and this is an amortization I'm using, I didn't make these calculations on my own or anything like that. Over these 5 years that you live in a house, you would have saved $4,700. So you put in $3,880, you've saved $4,720. It's not really a big difference. You barely getting your money back at that point. So if you do pay discount points, on average, it's going to take you roughly 4 or 5 years to break even, to start realizing the savings that you're going to get in interest over the life of the loan. The reality of it is, the difference in this example, because it's a little bit of a higher loan amount, the difference in payment between a 3% and a 3.25 is about $52 a month. That's not a whole lot in the grand scheme of things. I mean, what costs $50 a month, right? A couple of dinners, a dinner, hanging out with your girlfriends, you have, a couple of cocktails. It's completely up to you. You have to look at your financial situation, but I did want to make sure I explained what a discount point was, when you use it, why you use it, and the benefits. My last point that I want to make, whenever you're looking at advertisements and you go on websites and they say, or like they advertise this rate, like let's pretend that they're advertising, in my example, I said a 3.25. So let's pretend that the advertisement is 2.99. You're automatically like, well, XYZ lender's giving me a 2.99. You got to look a little bit in the fine print, because the reality of it is we get all our money from the same place. So the variations that we have in terms of the rates are often going to be passed on to you. So you want to make sure in the fine print that they're not telling you that you're going to pay 1 or 2 points to get that rate. There's a lender that everybody loves. It's all over TV, and you can go online and you can apply, and it's real fast. And because I do want to remain professional, I'm not going to say the name of the company, but oftentimes within the industry, one thing that we recognize is whenever they quote rates, they automatically put 2 points on it. And people see the rate and they so excited, and they don't even realize that they paying too much to get the loan unnecessarily. Okay. So in this particular example, if you would have gone to that particular company, and that particular company is going to have you pay 2 points. So instead of a 2.875, you might be at instead of a 3.25, you might be at a 2.875. Maybe. But hell, you done paid $8,000 to get down there. That's a lot of money when we've already addressed. It's a lot of money even just to get to the starting point without adding anything extra on. Don't get caught up in the rate. Get caught up in the payment. Because when you go and you purchase a car, the only thing you want to talk about is how much is my monthly payment going to be. Don't get bogged down in the minutia if you don't understand why you are paying discount points. If you don't need to, don't worry about it. If you're good with the payment, roll with it. It's okay. Because 9 times out of 10, you're not living in this house for 30 years. 9 times out of 10, you're not going to keep this loan for 30 years. I've been doing this for about 7 years. I have yet to see somebody with the same loan from 26 years ago. Nobody does it. So plan to have your loan for 5 to 7 years in most cases. When interest rates plummet like they did last year, people only had their loan for maybe 18 months. So imagine going into a house where you paid $4,000 to get this great interest rate, and you just turn right around in a year and a half, and now you're doing it again. Just to say that you got the best rate among your friends. So be very careful, ask questions, do the research, determine your lifestyle, determine what your long-term and short-term goals are. And if it does financially make sense for you to make that investment, go for it. There's nothing wrong with it. It's just, generally speaking, the motivation as to why people ask about discount points and why people are getting discount points defeats the purpose of the discount points, because you don't stay in the house or in the loan long enough to make that make financial sense. I hope this information was helpful. And if you have questions, please feel free to reach out to me. Y'all have a good day.